the unallocated London gold market, it's not appreciated that much. That basically gold, Paul Volcker in the 70s said gold is my enemy, right? Gold is the enemy. Gold, it's not the enemy. It's like saying a thermometer in Arizona in June is the enemy. It's not the enemy. It's just you're in Arizona in June. It's friggin' hot. And so in the same way, the way central bankers have managed, it was their enemy because they would have to tighten rates when they didn't want to tighten rates, right? It was forcing them to actually exercise discipline. What they have done to control these markets has been to allow the robust expansion of paper gold. Unallocated gold in London in particular, where there are unallocated over-the-counter claims, who knows, it's been estimated anywhere 20x, 50x, 100x, 1000x, nobody knows. Mm-hmm. You have some guesses, they're all guesses. COMEX also, it has gotten more paper driven. I had one of the biggest physical gold traders in the world tell me, I think 4 years ago, that when he started in the business 20 years prior to that, probably 20% of the volume on COMEX in the gold markets was at least related to a physical ounce. He's like, that's now probably 2%, and the volume's probably risen 3, 4, 5x. So they've basically, it's not the same thing in COMEX as is in unallocated, but the bottom line is if you have inflation, and that inflation drives monetary inflation, you expand the monetary base, you run big deficits. If that drives gold demand, there's two ways to deal with that gold demand. You can let the price of gold rise, more dollars chasing the same gold price up, or you can let the number of paper claims on gold ounces rise. And that way, with that, you can manage the pace of gold's rise. That's what they have chosen to do. That, though, is the weak link, because if you look at COMEX inventories, a small hedge fund could go to COMEX and say, I want to take all of it and break the market. The fact that they don't, there's an extraordinary informational value that most people just ignore. The fact that some small hedge fund hasn't gone and created a short squeeze like they did in AMC or like GameStop last year, right? Why not? The why not is because you get talked to by someone who has haircuts like ours, and they're like, you don't understand. That's not going to happen. We're going to cash settle you, and you will be persona non grata, best case. And that's just, again, this is statecraft. Gold is not just some free market. It is a political metal. And so now, if you're going to do that, if you're going to do the Hunt Brothers short squeeze, right? I'm not speculating. The Hunt Brothers tried this in silver in 1980. The system has to protect itself. The Hunt Brothers were not a sovereign. The Hunt Brothers were not the biggest oil exporter in the world, like Russia is. The Hunt Brothers did not have nuclear weapons. The Hunt Brothers did not have an army. The Hunt Brothers were not closely allied with China, who's the world, so on and so forth, right? It's a very different game at that level. And that's why I say people underappreciate the leverage that the energy that Russia has as their real currency could be. What if Russia comes out and just says, listen, we and China have agreed that to get around sanctions, we are going to transact in we're gonna settle gold or oil, in physical gold at a new ratio of 1,000 barrels per ounce of gold, and everyone is going to go, oh my God, this is a great arbitrage, right? I'm gonna go buy 1,000 ounces of COMEX gold or GLD, and then I'm gonna convert it to physical, and then I'm gonna take the physical over to Russia, and I'm gonna get 1,000 barrels of oil, and then I'm gonna sell the oil, and I'm gonna get rich. And the market properly is going to shut down. It's going to crash instantly. The paper gold markets will just go boop, cash settle everybody, game over.